I've been looking at buying property, and I thought it would be a good idea to discuss and explain loans and interest rates. Everything that goes into buying property can be used on other things, such as cars, education, and so on. For many of us, we aren't able to pay back things that are 50,000 plus in full. Most people take up loans on cars, education, and property due to not having the money on hand. When taking a loan, you can pay some upfront, which is a down payment, but then you have to pay the rest of it in whatever amount of time you come up with. The more time it takes to pay off the principal, the more interest you'll pay. Let's make an example and discuss what goes into a loan for property. Say I'm buying a home for $300,000. This is the sales price. You don't have to necessarily pay 20% down. Doing so will make you avoid PMI or private mortgage insurance. The more of a down payment you pay, the better. Let's say you get what's called an FHA loan or Federal Housing Administration loan. You normally have to pay a down payment of 3 to 5%. If we have to pay a 3% down payment for a $300,000 home, that would be $9,000. Our loan amount would then be $291,000. Next is figuring out how long you want to do a loan. You normally do a 15-year or 30-year loan. That's what I'll cover. A 15-year loan is a lower interest rate but higher payments on your principal. A 30-year loan is higher interest rates but lower payments on your principal. Lastly, you can always refinance down the road, but that would have to be money spent up front to get a lower interest rate, or you can pay up front to immediately lower the interest rate. Here's an example for both. Our loan amount is $291,000. Since we paid off a 3% down payment, a 15-year loan, you might get an interest rate of 2.5%. A 2.5% interest rate on a $291,000 house will be a loan amount of $349,264.19. For this loan, you will pay $58,264.19 in interest. This is added onto your sales price of the house that you have to pay in 15 years or 181 payments. Now let's do a 30-year loan, which you normally see more of because we hate ourselves. Since 30-year loans come with higher interest rates, instead of a 2.5%, we will go with a 3.5% interest rate. For a 30-year, 3.5%, $291,000 home, we will pay a total loan amount of $470,419.21 due to having to pay a whopping $179,419.21 in interest. A 1% interest rate increase for 180 more payments made us pay $412,155.02 more. What I want to show here is, if you can help it, pay as quick as possible. Also, interest is a scam. Almost $400,000. It's just insane. Now, I want to make another scenario. Let's say we didn't pay anything for the down payment. So now, instead of $291,000, we are paying $300,000 on this home. This is only $9,000 more we're paying. We are going to use the same interest rates for a 15 and 30-year loan. A 15-year loan total would be amount of $360,066.17, with $60,066.17 coming from interest. That is $1,801.99 extra if you don't pay the 3% down payment. For a 30-year loan, the total loan amount is $484,968.26, with the interest being $184,968.26. That is an extra $5,549.05 paid for not paying the 3% down payment. Once again, look at all the amount of interest we're paying. So pay as much as you can upfront as quick as you can to avoid having to pay a stupid amount of interest back. A thing to note about what interest rate you'll get is dependent on the length of the loan and your credit score. Someone with an 800 credit score will get a better interest rate than someone with a 700 credit score, which is still pretty good. But yeah, if you're going to go ahead and get, loans and this not and get property, make sure your credit is good before you do this. I'd say try to have at least 700 before you do this. To end it, what normally comes into a monthly payment for a home is principal, interest, taxes, insurance, and possibly an HOA, depending on if you live in a neighborhood. In this video, we talked about principal and interest, which is the main part of your payment for a home. But there are a few other factors. Sometime soon, I'll probably make a video on closing and what that entails. Thanks for listening. My channel is mainly 90% anime, but it's good to sprinkle a thing different here and there like this. Maybe you're not buying a home, but learning about interest is great for people who are going to college or someone who's buying a car or making any huge payment, for a matter of fact. You will most likely get a loan in your life and have to pay interest. Welcome to the morbid world. Loans and interests are awesome, says no one. Except, I guess, banks and lenders.